sending them armament or supplies or anything like that?
Yeah. So,
So you can, so yeah, the rhetoric may have changed, but as far as like uh, any material, uh, like I sent you that thing, JD Vance did have some stern words for Netanyahu or some people in Israel, but will it,
will that amount
if,
to anything?
will that actually amount to anything material?
Yeah, I noticed with Israel, they really go nuclear if politicians even take a slight aside from their positions, right? So here
Right.
here we are with Trump, and he might have uh, taken a small deviation from the plan, and here Miriam Adelson is calling him a traitor. I was hoping that this might be a good sign that he's able to step up to Netanyahu, but only time will tell, and we'll see. I did want to make a
to,
note that.
to, to do so, Danny, to do so, he would have to say, okay, we're not sending you any more armaments, or
Right.
it would have to be something material.
Yeah, I
You know,
agree. And as I mentioned to you, I was, we went to see the UFC Freedom 250, and in the hotel, they were playing Fox News or whatever, and it was just really funny the complete hopium that they're really pushing. So, you know,
yeah, and they're saying that Hormuz is open, right? Isn't
they're
that what you
basically
were
flat
telling
out
me?
saying that it's open, which
I sent you that little graph of the traffic. Does it look like it's open?
no,
You
not at
know?
all. And it's interesting because you'd think that they could be sued for that, but they're not even really technically a news organization anyway. It's entertainment.
Right, exactly. So yeah, it's but then again, at the same time, it is interesting. It's like, not that anybody, like I was saying with that one guy who's been on my radar as a scam artist for the longest time. That guy Patrick Bet David. I saw once
I
that,
can't
like,
stand that douche.
Jimmy Dore, I guess, was on his show once, and I knew automatically. You know me, like I have a really good BS detector. So as this guy was talking, I was like, nah, this guy, he's a scam artist. And then I saw on CoffeeZilla, and a friend of mine sent me a clip that, yeah, actually he got his whole start in multi-level marketing. You know what I mean?
He
So
strikes
it's
me as that
like,
kind of guy.
exactly. So it's like in a perfect world, people like that would automatically lose credibility. But it's like holding people to account nowadays. It's like that just doesn't seem to happen for whatever reason. I don't know why.
Because we're
It,
living
you
in
know,
clown
I,
world.
right, exactly. It would now, granted, you can only keep that stuff up for so long. Like, for instance, that PBD serving as a microcosm. Uh, Apparently, recent issues with, I guess, some dude that, like, he acted as like a sponsor or whatever, is like looks like he's going to prison for like 30 years for scamming people, like retirees and stuff like that. And that was like one of his biggest sponsors.
Oh, I know who you're talking about. Yeah.
So his, like, again, people like Ben Shapiro and Dave Rubin and PBD or whatever, they are losing. Clearly, they've lost a great deal of credibility because they're, even, like Rogan's podcast and stuff like that. There's a slow attrition.
Mhm.
People just, they're losing viewership and losing viewership and losing viewership. So it
Yeah, the
happens.
Daily Wire is getting slaughtered.
Right, exactly. So it happens, but it seems like it has to occur gradually over time. I'm not sure why that is,
Yep.
but anyway, uh, the yeah, what I was so yes, yeah, there is a definite, it was interesting what Trump said over at the G7, when, and Danny, when I was looking at like what the markets are doing with like $70 oil and everything, and I'm like, this is real, like they really want to be optimistic. You know what I mean? Like, when you really look at all of the structural hurdles that have to, and not just the optimism, but you're going to price things like in such a way that, like, think about this as like as an example, like PBR, which is, Petrobras, the Brazilian company that's incredibly profitable.
Favorite of the show.
Yeah, yeah, and but their stock value is discounted because of, quote, geopolitical risk. When Brazil and the United States, actually, we're not at war. We're not, and they have a high dividend. They treat their investors well and their shareholders well and everything. So, but there's still a geopolitical risk. However, apparently there's no geopolitical risk in the Middle East. Wow. That's how the market prices things. You see what I'm saying?
Well,
like,
yeah,
that asymmetry is so bizarre to me.
To shed some light on that, it's not just geopolitical risk in quotes. It's the fact that it is a Brazilian company, and
Sure.
Brazil is viewed as a developing nation and subject to corruption and things like that. Not my words. I'm just echoing that.
Yeah,
So
sure. Right.
to a lot of folks, that is a significant risk, whereas the Middle East might carry different risks.
Right. But as of now, there's essentially zero geopolitical risk being priced into the markets, like, as we speak.
Oh, correct. I'm not
Which,
saying
as
it's
we'll
rational.
get to, gives a structural asymmetric discount looking long term anyway. Which I'm not necessarily even complaining about that, because, like, when you just price what normal fair value for some of these companies are, due to just the psychology of the market, they're pricing them now at deep discounts to what their actual what their actual profitability and fair value was before. You know what I mean? So it's very interesting how that works. It's like, I guess part of that would be due to momentum, in that, due to algo trading and so forth, or retail traders, or they like have AI trading where it's like picks up on a news headline and hashtags and so forth, and
Sure.
trades based off that information, just like the Axios headlines or whatever. And due to that, it just causes like a massive flip to sector rotation, which is fine.
Yeah,
I mean,
that happens.
I'm not like really, I'm not complaining. It's just the irrationality of it is sort of like almost awe-inspiring to see.
Yeah,
You know
but
what I mean?
to play devil's advocate, I mean, picture yourself as a financial analyst, or your run-of-the-mill financial planner. Every news source or every source of information you have is basically saying, okay, it's a rough patch, little bump in the road, but we'll be out of it, right? Unless you understand geopolitics yourself, the oil routes, things like you and I do, because we've studied that for years and years. It's very easy to be caught in a little bubble, right? And so, while I disagree with it, I also understand why it happens, or at least a facet of it. And then you have Fox News basically parroting over and over that the Strait of
Right.
Hormuz is all but open, and you're this financial planner guy. You're like, okay, cool, we're out of the water.
Yeah, right. And that's something that I've been harking on for a very long time. That's where cognitive security, we talk about OPSEC,
CogSec, yeah.
right? But like cognitive security is super important. Like what your signal intelligence actually tells you, the signal versus the noise.
Sure.
And knowing
the echo
difference
chambers
between those is really where that arbitrage can be made.
Mm-hmm.
You know what I mean? So yeah, this is it's entertaining. It's just sort of like incredible to see. Like, even with the I did hear, I didn't look into it today, but SpaceX was like, shooting towards the valuations of like Apple and Amazon.
Well, I do know that it's the drive is primarily retail traders, and we've seen this before. Nothing new. It did have a little bit of a retracement, but as far as I know, it's picked back up. And so, we're basically going to see, and what I think is highly likely, we'll see like a Bitcoin type behavior, where we have a drastic retracement. I'm surprised it hasn't happened already, just because as we know that was exit liquidity for a lot of folks. So, we all know who.
Well, there were the legalities with that were sort of tricky too, in that the like apparently if you bought SpaceX, they wanted you to hold it. Like you would actually have to agree to hold it for like a year or something if you were a retail trader or something.
Interesting.
Like they actually did things to make sure people didn't
Pump and dump.
immediately just like, yeah, exactly, just dump it. Because just like Dogecoin or whatever, it wouldn't surprise me if like just about everybody that I saw when I was looking into it, like they were buying it either based on Elon fairy dust. Actually, there was this one guy that ran he was like an actual financial planner that worked for Fidelity or something like that, who said that specifically. He actually used that as if it's like a technical real world term. And then everybody else was just basically that they were looking to get rid of it, just basically based off of the hype that as soon as they attained that they put in for early shares just to essentially get rid of them later on down the road.
Yep.
So yeah. So, but yeah, we're pulling up on now. Here's the thing: is as Trump even said at the G7 meeting, and when some people have been going after him, that we hit complete tank bottoms within 4 weeks. Now, first of all, if you're trying to negotiate a deal, which technically he's still supposed to be doing, or I guess JD Vance is supposed to be doing in Geneva, Switzerland now, you don't really want to say that, because that puts the Iranians then in a really good position.
You would think for somebody who wrote a book called The Art of the Deal.
Right. They wouldn't. Yeah, I don't know if he says that he holds all the cards, he holds all the cards. I kind of wonder, I mean, granted he is in his 80s or whatever. I kind of wonder, like, has Trump ever played a game of Texas Hold'em or anything where that sort of stuff is actually comes into play? Mm-hmm. Because he does tend to show his cards rather frequently and abruptly, and he did that. And if we're at tank bottoms in 4 weeks, it's going to be great for all of our picks, but for everybody else, it's going to be a disaster.
Well,
it's going to be a big disaster.
So it's one thing if you see oil spike from, for example, 110 to 150, that is at least is kind of boiling a frog. Whereas if it spikes from 70 to 150, that's real problematic.
Or 70 to 300.
Correct.
Like I've stayed away from the trade of trading, that BNO trade of buying BNO just to then flip it when oil spikes. But man, if we're, because like I'm a risk averse sort of person. So, but man, if we're running up on, July and oil's still around this price range, that's going to be very tempting. Like that's going to be super hard to not do.
Yeah.
Because that trade is just too easy, But I do understand with respect to trading. I did use the opportunity to sort of narrow down my portfolio and restructure it when I went into some more detail on this thesis. For instance, I did last week. I sold Marathon, which was up at 250 something. It was high up there, but like I sold Marathon and then funneled that into like CVE and CNQ, because if you see right there, third down, I was actually going to get into Shell too, but when I looked into this, after July, these are the companies that are actually going to not just owe the oil that they took out of the SPR back, they're going to go interest on top of it. And as we've discussed, there's all sorts of structural and geopolitical reasons why look, even if there is a memorandum of understanding and Trump needs oil to be low for a while and so on and so forth, what's to say that, Israel and the U.S. doesn't come back, say, after midterms are over? You see what I'm saying? Like, there's no, and not just that, but as this whole thing has shown, like, what do the Iranians really have where they have any reason to trust the United States? If I were them, I personally wouldn't. So with that said, Marathon, they're going to owe back, 7.7 million barrels back that I believe is due within a year.
That's right.
That concluding. And they're going to owe, I believe, 25% interest as well. Now, I'm glad Trump did structure things that way. But at the same time, are we really going to be better for it in the first place? Not only that, but say they don't deliver on those barrels, I don't know what the consequences are going to be, if any. So that's sort of just pushing, kicking the can down the road. But all of these right here are companies that I was interested, like Energy Transfer is another one of them. I was looking at them as, as potentially getting into, but I bought ENB instead, which is Enbridge, which is, works with the Canadian refiners. So just to keep in mind, BP is a big one there, and I believe Exxon is in this mix as well. So
I don't see it on the list unless I'm just blind. However, it would not make sense for it to not be there, if that makes any sense.
Right. That's something to look into if you have that exposure there. And not just that, but when I was looking further into the thesis, like I was looking into potentially getting into ConocoPhillips because of a lot of the structural tailwinds that they have inside the United States. But when I looked into it, ConocoPhillips still has a lot of assets in the Middle East, in particular natural gas in the UAE.
Yeah, and for those new to the show, that's the only, we're big on energy stocks. However, strong presence in the Middle East right now is definitely not a good thing, especially what with all the conflict that's been going on. Iran's been deliberately taking out U.S. infrastructure, for example. I'm not sure if that shows any signs of abating, and especially, if Trump turns back on his word, which he's likely to do, we could see more of that. So I'm not sure what the extent of the damage is, but I do know that a lot of the Exxon, for example, the infrastructure has been hit, right? So it's not to say that I don't think Exxon's not a good pick. Of course it is. However, it's all about timing.
Right. And like, what do we say in combat sports? Speed, power, and
timing. Yep.
That's right.
That's the triad.
Yep. You can have all the speed and all the power in the world, but if your timing's off, you're in trouble.
Yep.
So, but with that said, the overall geopolitical scenario is what I'm trying to push forward is, despite what the markets are doing, there's no real change. Despite the signing of the MOU and the change in rhetoric, our Navy's still there. We still have our military assets there. And, as part of this deal, it's sort of Trump did what I will give to him is he did sort of have to swallow his pride in that, the memorandum of understanding, it's basically the United States capitulating to the Iranians.
There's no other way.
Yeah, exactly. So it's an unfortunate, scenario, but like I said, that's why, I didn't see this working out well. But now, don't get me wrong, it would be fantastic if there were a peace deal and long-term peace and everything else, and we could just sort of move on from this chapter, but I know better because I've been to that region. And how long have we been in the Middle East, Danny? Has the United States been in the Middle East, and it's been sort of like a big issue geopolitically for the
Right.
United States, all the way back to the Iranian Revolution.
Arguably even before that with Egypt.
Right. Exactly.
So we're talking 1950s.
Yeah. Exactly. And with what happened with Egypt in the Suez Crisis, this sort of rhymes with history here, which is what's happened with the United States and Iran. And it's unfortunate because there's not a military solution here. Like I've said, it's unfortunate, but that's just the case.
Yeah.
So if you want to go to actually, where's the slide with the traffic from Hormuz? Yeah. So yeah, you see there is a bit pick up there in the end of June, but I don't care what Fox News says. Doesn't seem to me like Hormuz is back to normal and under full U.S. control.
Yeah.
So you do have to wonder, how long does this have to continue? What I have gamed out is it continues. And this is some sort of inside baseball stuff where I have it game planned where, from what I've heard, the Iranians plan on holding this stalemate scenario till about January. And that's when they open it up themselves, right? But they're going to have control, it seems, if the MOU is any indication, of 20% of the world's oil supply. And that makes them very, very, very powerful.
Yeah.
And think about it. Russia has control over 11%?
Thereabouts, yeah.
And Russia's pretty powerful. And so you see, and Iran in the Middle East in general, that's a key. That's a key trading route between the hemispheres, right? So the person or the group that controls that geopolitical sector can sort of control trade flows, at least until the Arctic opens up, right? So this area is going to be contested for at least the next decade.
Right.
So either way, the geopolitical risk is never going to be zero. So that's why I'm trying to focus on defensive strategies more towards the Western Hemisphere. And the math that I did showed that the U.S. could be entirely self-sufficient if you include South America and Canada in those mathematics.
We have admittedly taken a little bit of a hit, what with the oil, the situation on oil, because oil sold off drastically from where we were last time. I want to say last time we spoke, it was in the 90s, if not hundreds. And so, Petrobras, this is the first one that we touted. Seeing a little bit of a retracement here. Not terrible. I'm not worried by any means. In fact, I might add, this is actually a really good point to add. If you look, it's a 50% Fibonacci retracement. So not bad. What was this one? And okay, Exxon. We did see the Head and Shoulders breakdown. If you remember, I've been calling out this pattern for a while, and we talked about it on the show. It looks like the second, you could even see my diagram. I guess this was from last time. I could fix the second shoulder there. Sometimes you do see, it's almost like you see a Head and Shoulders pattern within a Head and Shoulders pattern. I would be surprised if we hit 129.42. I'm a buyer there. So it's a good thing that we caution to kind of hold off on this because I think that there's still some room to drop. This one, Sucor Energy, I think I held off on that one just because it's a higher price, and I believe that we identified some of the risk from a previous episode, so I kind of held off on that one.
Yeah, I like CVE and CNQ better. I like CVE in particular. I really like CVE.
Yeah, so CVE.
Yeah, CVE and CNQ.
Yep. So CNQ's right here. CVE is directly above it. Again,
Yeah, I'm a buyer here.
yeah, I'm a
Yep.
buyer here too. I think I'm going to add to my position actually. The red line's where I initially entered. Probably a little hasty. I'm okay with that because again, I'm holding this for a longer term. And again, this is a dividend stock, correct?
Hmm.
It should be just fact check. Yeah, and it's actually a pretty good one too at 4.12. So this is something I want to accumulate. So I don't mind buying here at even a 50% retracement. I think that these are bargain values to be honest with you. Same thing with CVE. We're looking at $25. That is a good retracement.
Hmm.
618 is classic retracement where we may see a very strong pivot. But I'm still a buyer at 23.22. Don't forget we have this 50% retracement here, which is perfectly reasonable given the situation. I don't know how long Trump is going to jawbone, oil before reality hits. So I believe you said we have 4 weeks. So a lot can happen in those 4 weeks. We could
More
see
like
what.
three now,
That's true.
but
That's true
yeah, more
because
like three now.
we
Yeah.
said 4 weeks, but that was a week ago. So
Hmm.
math. Um,
Yep.
so yeah, so that's a good one. Definitely something to keep an eye on. Something I will be placing orders for to stock up on
Or
these lower
just or
prices.
just hold, you know.
Well, I'm definitely holding, but I would like to have more of this, right? So
Yeah, the
I'm
pipelines the pipelines are holding up really, really well. EPD and ENB for me are still, minting money
Yeah,
the entire
so
time.
one thing, while you mention that, I'm not the kind of guy who takes a giant chunk of money and invests it all at one time. I like to incrementally add. In the past, that's just because I was completely broke and all I could afford was like $20 here or there that would add up to 100, which would maybe allow me to buy like 2 shares of something. And so I just physically wasn't able to. Now I do that just to force myself to add incrementally. I mean, if I would have spent like $1,000 on this, I'd still be underwater, which
Right.
sucks, even though, you know what I mean? So it's really good to kind of like scale into positions, even if you do believe in them. And you know what? If it takes off, like let's say we're in this buying phase here, you know what? You just buy on dips anyway, right? So either way,
Mhm.
you're adding to your position in a way that makes sense. So again, just because these are underwater doesn't mean it's the end of the world. In fact, it's the beginning. And this is advice to completely unsolicited advice to all those struggling, right? Because I was there and yet still I could do it, right? $20 here and there is all you need. All right. So we looked at EPD. What about VLO? What do you think? How do you think that this is going to impact Valero in particular?
Well, I sold Valero,
Okay.
so yeah, I think it's going to impact Valero poorly.
Right.
That's
That's
why I
that.
sold.
That's kind of what I was getting at. I held off on them just because, as you could see, this is a rather expensive stock, and I wanted a real bargain on this one. It's just not ready yet, in my opinion.
Not just well, no, not just that, but like I said, when we hit tank bottoms in July, Danny, that's part of the whole thesis here. Uh, the complex refiner. First of all, Valero. I'm sorry. There's Marathon and Valero. I sold Valero because structurally, as long as the crude, the SPR is holding out, they're good, right? But when that SPR gets jerked away and then there's that rug pull, they need
Mm-hmm.
to make up the difference from other crude
Correct.
because they're
Yeah.
not going to have that 10 million barrels a day to pull, or 9.9 million barrels a week, I believe is, yes, whatever. They're not going to be able to make up that difference uh, in as soon as they can't, right? They're going to be pulling from Petrobras. They're going to be pulling from the Canadian upstream oil sands and so forth. But that's going to cause their efficiency to drop down substantially, and they're going to have to bid up those contracts for those upstream oil wells. That's why I exited this position now for Valero. Is they were great on the ride up, but when I looked at the structure of this, I was like, nah, I'm out. I'm just cutting it, and then recycling back into the pipeline infrastructure. and the upstreamers.
That's a great strategy. Speaking of infrastructure, I believe it was Crescent, which was had a lot of infrastructure, correct?
No, that's the big infrastructure that I have is the EPD and the ENB.
Okay.
Those are the infrastructure ones.
All right. So Crescent was another one that I have been adding to. I put the dash line where I bought again.
Yeah, just
Um,
hold on that.
yeah,
That's
yeah,
past July. Yeah.
yeah, exactly. So basically, what I'm doing is trying to buy, just look for discounts as this thing drops, adding a little bit to the position. Speaking of which, a 382 retracement is a great position to start looking at adding to this one as well.
Hmm.
Let's see, what do we have here? So it looks like this guy, I'm a bit underwater here. Nothing to be worried about. 382 retracement would be the point where we want to add to that one.
Now I have the one. Yeah, that's a natural gas play out of the Gulf. Uh, I mean that should do okay if you hold it for a while. I'm real heavy, Danny, right now in the pipeline infrastructure, uh, and what I'm looking at right now in particular is the Permian's still good. All of those plays, those shale plays are going to be important. But the way I look at it is the refiners just to keep running, they're going to have to pull from the shale plays
Mhm.
inside the United States, and they're going to have to pull from the Canadian and the South American, right? Just to keep running. So they're going to bid those contracts up indefinitely because there's just going to be that supply differential, right? So I was looking into what do I have? It was ConocoPhillips and I have it right here.
Okay.
Yeah, here we are.
Oh, we have looked at this before. See, oh,
Yeah,
it's right here. Duh. Okay.
CHRD,
Let's see.
HES.
Okay, so HES, hydraulic elements and systems.
No, it's Hess.
Oh,
Hess Energy. And CHRD is Chord Energy.
yeah, I saw. Okay, yeah. So Cord Energy is right here. Yep.
Now, I was looking at this because this is a great. They own most of the Balkan, right?
Mhm.
And this is where a lot of the oil is going to come from in order to make up that differential for the
Okay.
refiners. And interestingly enough, even though there's no like Middle East anything, and the fair value it should be in like the 160s, it's selling off in the sector rotation along with everything
Right.
else. So it's getting just like the Canadians are at the same time. So there's like a structural discount to this one in particular.
Yeah, we've been
Uh,
seeing this type of pattern kind of repeat with a lot of our selections.
yeah. But cord, usually this is too expensive for me. But I'm looking at getting in here, you know,
50% retracement isn't bad.
exactly right.
Yeah.
That's what I'm looking at getting into. So it was too expensive for me before to acquire shares, but now it's around my price range.
And I guess we can
So
conclude with oil itself. If you're
yeah,
wondering why some of our picks are not, blasting off, I mean,
that's
look at
why.
this
Okay.
sell-off, right? I draw your attention to these lines and how close together they are, because the normal range for this is more like this, right? So these lines make sense; they're levels. Okay, but when you go out like this, just I mean, look at this, $111 to 70. The base of the 70 handle, it's like 74 or something like that. So we're seeing just a tremendous sell-off here, which is, of course, it's only natural that that's going to impact oil-related stocks, right? So we're just seeing that in the markets. Not to mention the
Now,
infrastructure stuff that we talked about with Exxon and some others.
now with that said, though, this is giving what I'm trying to point out is if you look at companies like EOG, COP, and CHRD, Cord Energy, which is what I'm looking at right now, which is more
Mm-hmm.
within my price range. And that's a pure North American play. These are like this drop in oil and the sector sell off due to it is actually like uncovering like things that are normally expensive. It's just fortunately actually making them cheaper
Sure,
to
the
buy
tide's
up
rolling out.
at the opportune time.
Yeah,
Right, exactly.
that's a great way to look at it. I know a lot of folks, they look at market sell-offs and they get scared or whatever. For me, that's actually a time to get excited. And the reason why
Right.
is that you're getting a discount, right? Do you get go crazy when Marshalls is having a sale? No, you actually go and buy, right? That's the time to buy.
Right.
And so that's how I view the
Right.
markets as well. So it's
Well,
amazing how
that's why
a lot of people don't see it that way.
people were freaking out during the COVID scenario. And then when we were talking about Exxon, I was
Yep.
like, what was the first thing that I said? I was like, oh man, that's like
No, when I
that's a
saw,
premier asset you
yeah,
can get at like even with the CVE and C&Q retracements, which actually hasn't been that precipitous, but even them dropping a bit, these are like premium world class assets that are like on fire sale right
yeah,
now.
yeah,
You know
exactly.
what I
And so
mean?
I
So
had the same thing with the banking stocks when, for example, during the financial crisis, when you could get, I don't know the exact numbers, but we're talking like 75% discounts in some.
right,
And I actually
exactly.
still have those stocks from all the way back then.
Yeah, as part of my discipline, what I'm trying to do is in my account try to keep $100 cash. Now that I sold Valero, right? I've been able to do this, but like try to keep $100 there just in case like there's some for whatever reason there
Yeah.
is some catastrophe and you can buy stuff on pennies on the dollar right there just for that reason. You know what I mean?
So someone that I had on a podcast in a previous life, he basically said you got to have like three buckets of money, right? Bucket A is like your just normal savings, right? Just have cash on hand. You got to have a rainy day fund just in case you need a new
Mm-hmm.
roof or whatever. And then the third bucket is your fire sale bucket, and that's so that if an opportunity takes place, you can capitalize on it.
Right, exactly. Yeah, and I'm trying to maintain that discipline with the limited funds that I have. But on the flip side, Danny, like I, let's think about this for a second. If oil is crashing presently just based on the optimistic hope that there's no geopolitical risk, God, it tickles me because anytime I think of the Middle East, I think like blown up people and like all
Not
the
pretty, not
military
pretty things
hardware
at
that
all.
we have
Yeah.
there,
Not
you
not
know?
not pretty things at all.
Yeah, and it's just like pricing in zero geopolitical risk. It's like, oh my goodness, like
Yeah.
seriously. But the that being the case, in oil dropping this low, what I'm hoping for, I mean, in a purely like selfish way, it would be great if oil dropped all the way down to 60 briefly for a while. You know what I mean? Like then you'd really be able to like get some stuff in your bag that's just like incredibly valuable for the long term.
Yeah.
That's still, by the way, companies like CNQ, CVE, and even Petrobras, like, guess what? They're still profitable and they pay
Yeah.
dividends at that low price.
Right.
So it's like, sign me up, right?
So exactly. And so when you buy at a lower price and then it goes up, you're making dividends on that new price. So not
Exactly.
only are you making dividends now, so it's like, okay, if it stays where it's at, maybe goes a little bit under, whatever, you're still making dividends on it, but as it goes up, you get dividends paid on that.
On top of it.
Right.
Exactly. So, and then say there's an emergency or whatever, you can always cycle out of those when they're at the highs. So
Yep.
that would be great for us given this. But I don't see them going much lower than 70 unless there's just some, you know, I don't know, man. When I look at the market, sometimes I see lemmings is what I see so often. You know what I mean? Like usually it's buy the rumor, sell the news, right? Here it's actually flipped a bit where it's like they're selling off
The FOMO.
on
That's
the rumor. Yeah,
the
right.
opposite of buy
Exactly.
the rumor, sell the news is FOMO, right? So
Yeah,
they're basically hearing some BS on Fox News and just hitting buttons, right? Or I don't know. I don't know what the pundits are saying. There's a lot of people, some of them regrettably are in my family, who just are like, internet man says push button, I push button.
that is an exact example.
Yep.
Did happen.
Yeah,
Yep.
and you know exactly what I'm talking about here. So,
Yep. You
um,
were trying to actually explain the
I was,
technicals and everything,
I
and he
was.
didn't want to hear it.
No, he's just like, no,
Didn't want to
internet
hear
man
it.
says push button. I have a subscription. What do I need? Why do I need to hear your logic?
That's so sad.
Yeah,
That's so sad.
lost 10 grand too. So don't be that guy.
Don't be that guy.
Yeah.
But with that said, these lows can only hold through mid July. So it's like with that said though, structurally, like if that's the case and we hit tank bottoms and it's still low, like what I'm concerned about is if you're that sort of they're if you're that much over your skis, right, in relation to the material, then when the material shows up, nobody's going to be expecting it, which is the part that really does concern me, Danny.
Right.
That's the part, because that's when people actually do panic.
Yeah, exactly. So part of the reason why I have this zoomed in like this is you see there's multiple support levels, but below this, of course, there's levels everywhere just because of the scale. I just don't see this digging into the 60s. I just don't. And don't forget, we have it's bordering on imminent that we're going to actually see this shockwave of actual scarcity, right? So if you actually look at this pattern right here, you often see this in strong sell-offs. This is actually looking like an inverse head and shoulders pattern right here, which means we're very likely to break out. I'm just eyeballing it here to 78. Was that 78.90, which is just the last level before 80. So we're looking at as we get closer to this, and if people aren't seeing the hopium that they've been fed, that we could potentially see 80s very shortly, which are good for our picks. But like I said, the minimum I see it at is 70. I don't see it going into the 60s because you see there's just support building here, right? So there's only so much you can keep pushing something when there's buyers for good reason.
Right. Now, can you do me a favor here? Can you pull up CHRD and PR real quick? Because with this sell-off, I'm looking at getting in at lows, but we do have about 3 weeks to get those lows in. So it's like I don't want to prematurely buy more. You know what I mean? Like,
right.
You get what I'm saying? Like I don't want to prematurely
100%.
buy more only for it to go lower.
That's
I
right.
want to get in at the lowest possible.
So I'm looking at these two levels here, 119.57 and 112 for CHRD. Just because, again, I don't see oil going that much lower. Could it? Yes. If it does, we want to be prepared. But, as you see here from this, we're already at discount levels, right?
Yeah.
So we're already at the low of this range here. If you see what's the one thing you want to look for is where is the asset what we call establishing value, right? So we have a strong establishment of value right here in this little block right here from 119 to 151 with this low here at 119.57, a very strong support level, right? And that's established by this guy over here, previous low. Those always act because the markets are telling exactly what we are. Hey, this went this far this went this far low before, right? It's a normal low. That is the discount. Now, of
Right.
course, can it go lower? Of course, but that that tends to be the rule for how you form what we call value, right? Where did it top out at? Because again, if it tops out, then people are going to be like, well, it got here before, let me take profits, okay? Versus if it got
Hmm.
down here again, well, that's establishing the low, that's the discount, okay? And so as we see here, the discounted rate would be 119.57. If we're really being stingy and we expect oil to go materially lower than 112, couldn't hurt to have a limit order placed at both.
Okay. Yeah. All right.
Couldn't hurt.
Yeah. Now, the only thing that I didn't like about this one, even though it's at a structural discount, is they do have some outstanding debt, whereas most of the other ones are actually like just solid profits.
Cash flow
And
positive.
any excess cash flow they have is just extra, you know what I mean, extra on top. So I just that's one thing I'm gonna
Debt is
have to
not
think about.
always a bad thing, because oftentimes, in just for example, in tech, what you'll do is you'll take debt to put it into research and development. Um, this obviously this isn't a thing. These are material assets here, so they could be take. I have to look at the books and see a little further, but just because they have debt doesn't necessarily mean it's a red flag per se. I do totally agree that if they have no debt, that's awesome. But if they do have it, you just don't know what they're doing with it, right?
Okay.
Um, so
Now, yeah. Okay.
you
So
EOD,
just know where what that debt is, where it is structurally, and
correct?
how that
Yeah,
can affect the
and how they're
operation.
using
Yeah.
it, right? Debt is a tool,
Right.
right?
Now PR.
Uh,
Um.
PR, I think I have. Oh yeah, right
Yeah.
here.
Permian
Permian
Resources,
Resources.
because they're dipping down too. But I'm just, I was looking at maybe putting in a limit order at like 14.50, $15. Maybe I was thinking I could get away with that. Uh,
1450. I mean, that's like 14. That's like roughly here.
yeah, I'm probably not going to
Yeah, I
go
think
with
that
that one.
that's a little aggressive. I'd be looking at this 50% retracement. We've already broken through lows, which means we're kind of in new price territory. 1773 and 1673 would
Mhm.
be the levels I'd be looking at that. Um, yeah, because I don't see this worst case. I see this going to 1551 because we have this is in rough agreement with this relative high over here. Um,
Gotcha.
so
Yeah.
that's those are the levels I'm looking at for that.
There's again profitable, cash flow positive. So,
Yep.
it's just one of those things where it's like it's a good business. And, man, yeah,
Yep.
this is like it does make me wonder because I don't know, it just to compare it with the SpaceX thing, you know what I mean? Or a lot of these AI IPOs that are coming out. Like, man, Danny, when I was working with various AIs today, like, running scenarios and stuff like that, like some of the math they were doing was just wrong. I was like, wait a minute, and these are supposed to IPO as like billion-dollar companies,
Yeah, so I
but
did
they
want
were
to
getting
take a
basic math
moment
wrong.
to
Like,
review to talk about exactly what you're saying with regard to SpaceX, for example. Is that okay? The SpaceX IPO took off, largely retail driven. It is not part of the S&P, as far as I know. Why? Because S&P demands at least 2 quarters of being profitable, which they can't do.
they can't do right. Yeah, yeah.
So that aside, if we notice, so a big stock like this taking off and really doing well, you would think that would drive the stock market upwards. It hasn't. Why? Well, number one, it's not part of the S&P 500. Number two, a lot of many people don't have just the cash on hand to be aping into this. So what do? They sell out from other things, right? So we saw this relative high here. Um, or is it an all-time high? If it is, it just kind of eked it out. But the point is, we have like this relative sell-off here, but we're near highs. I could see it. I could see it feeling out lower values. But it's equally likely that after the SpaceX kind of fervor has subsided and maybe perhaps some of our picks start taking off. The energy sector comes back to life as the things we discuss come into play. That we could see an attempt at new highs yet again. The issue is the sell-off here. Again, a lot of people are asking like, well, okay, if SpaceX is doing so well, why is the market kind of lagging? That's why.
Yeah, I gotcha. Now, the I wanted to point out one thing about CVE that I actually am really, really, really. The more I find out about this company, the more like I actually like it, because they like originally I wasn't even sure what share buybacks were or how they operated, but it's sort of incredible to shareholders when they do that,
Correct.
because they buy the shares back with the profits they have, then they cancel it, meaning the share there's less outstanding shares, meaning more
It's
of it goes
it's
to the
essentially
shareholders that
like
stick around. Right.
deflation. It's
Right.
deflation
It's
basically.
deflationary.
Yeah.
Right. Exactly. To the
And
shareholders.
a lot of times stock buybacks can be a bad sign. You see that in the retail sector, and that
Right.
is it's like a form of autophagia basically.
Mm-hmm.
However, it can be a good thing as well. And that's again when you want to have like a form of deflation, decrease the number of outstanding. What does that do to your shares, right?
Mm-hmm. Right. Exactly.
If
Now
if
with
only the Fed would take that example.
right, with CVE, one thing that I found out when I was looking at the infrastructure and when I got into ENB, which is the Enbridge pipeline system, um, they actually have assets in North America, like domestic United States of America, where they have their own pipelines that feed their crude and natural gas, by the way, directly to their own refining operations inside the United States, that they then can sell off at market value,
Mhm.
right? Which is brilliant, because that means they have the refining capacity on one. So it's like a barbell strategy, right? They have the refining capacity on one end, then they have upstream on the other end. I actually own the middle too.
Sure.
You know what I mean? So even while refiners inside the United States come July are going to have they're going to have like massive trouble actually like refining their products to sell the market. A company like CVE actually has the opposite, because they have their own upstream supply that they can thread and toggle however they want.
Right.
So I just wanted to. It's sort of like it's nice that they have that asset, because that way they don't necessarily have to beg with their product either. What I like about it is they're strategically located in Alberta, where they can sell their oil sands, their
Right.
sour crude, if you will, off to the Pacific market. So we're talking Korea, Japan, China, right? Philippines, uh, or they can pipe it to the United States, meaning, or they can pipe it to their own refining capacity to then sell to market. So there's a lot of dynamism there where they're strategically located, right? So as prices are bid up throughout that supply chain in that market, right, they can basically be the kingmaker and make their choice and price their product however they wish. So
Yeah.
it's kind of incredible when you look at it, and at the same time when you see it selling off, like, I mean, it hasn't sold off a whole bunch, but when you see it discounting and discounting, it's like, oh man, this
Yeah.
is this is really
Yeah.
nice. I
Exactly.
like this. They pay dividend too, so
Yep.
it's I really like it. But Danny, this
Yep.
this is going to be concerning here if we actually are at tank bottoms and people aren't expecting it. Then all of a sudden, gasoline, or God, what? Imagine this in July or August, we have a hurricane here in Florida.
So
Say a Cat 5 hits the Gulf of Mexico,
this
takes
is
out the
why I've been
refineries.
telling to everybody I know, it can't hurt to stock up on some canned goods, right?
Right?
When did that ever do you wrong, right? And you know what? If
Yeah,
if
right,
if nothing
exactly.
happens, then you could kind of munch on them throughout the year, like I do. And
Mm-hmm.
I've always kind of had that mentality. Why? Because I live in fucking Florida, right? And we have a
Mm-hmm.
little thing called hurricanes, right? So you could be easily looking at 2 weeks without power, right? Or unable to get to the grocery store, whatever. That is a very real thing, right? So I look at it that way, and the fact that these fuel prices are, what are they going to impact first? Food, right? So not only are you going to be potentially paying up to $10, $8, $10 at the pump, but that obviously your truckers and your food transport is going to have to pay that as well, right? So you're going to see that drive up food costs. And what was the saying? Three missed meals. We're always three missed meals away from complete
A
anarchy.
revolution.
Yeah.
Yeah,
So
that was Lenin. Yeah,
yeah.
Lenin
So
said that.
what is the harm in just, I don't know, having a couple extra food, cans of soup, and I have these little broth things. I have my Bunsen burners. What's the harm in that?
Yeah, and not just that, but I mean, me, I'm sort of into the survivalist stuff anyway. So I mean, I've got like, I was one of the few people that actually had like tactical gas masks during COVID. You know,
Yeah, I remember you used to wear them to Publix and stuff.
yeah, little kids were coming up at me like, "Oh wow, that's so cool." But yeah, I mean, I still have, I somewhere in storage I have a whole bug out bag. But I even sent Danny an email with a really cool company that makes water filtration
Oh yeah, that's right.
straw and thing. Yeah, so it's like, if say the electricity does go out or whatever, and that can shut down water pumps and so forth and reduce water pressure. Uh, you know, Not just that, but these straws are, they're good for like several thousand gallons of water too. And they filter out microplastics and everything. It's really, really
Yeah,
good
and
stuff.
that's
And it's like $40 or $30, or it's like really inexpensive as well.
right, right. That
Definitely worth having.
definitely can't hurt to have that around. Another thing I like to do, this is just as a general rule, is I'll buy like those big 2.5 gallon jugs of water, and I drink that throughout the week. I just even though I have the filtration, I don't know. I have it in my mind that the spring water that you get from Publix or whatever is of better quality. Maybe that's true, maybe that's not. But
Right.
at the same time, that kind of sets me in this habit of always having water available.
Yeah,
Because
exactly. So,
three of those will last me through the week. I drink
yeah,
about a gallon of water a day.
right. With that said, it never hurts to have water filtration,
Of course,
canned and non-perishable foods,
absolutely.
because man, if there's a huge diesel shortage and all of a sudden stuff's not showing up to the grocery stores, that's going to be what did Trump actually say? If you want to see bedlam, wait till we run out of wait till
No,
we
he
run out
actually
of
did say
oil.
that. Yeah, he
Yeah,
actually did
he
say
actually
that.
used the term bedlam.
Yeah.
So yeah, that could still happen. So,
Yeah. All right. Well, on that note, I think that was a good discussion there, and we'll see you next week.
all right, Dane.
Yep.
See
Take
you.
care.
Thanks.
Yep.